This week, we saw great CPI numbers and a very interesting market reaction. If DXY keeps sliding while metals hold up, risk assets can rip. We'll show you what to watch next, the exact levels that decide whether this is a real rotation or just noise. Hello, everyone, and welcome back to our end of week session over here today. We have some very interesting news immediately on the docket. We have our CPI numbers that came in midweek, and good news, they actually were cooler than what we expected them to be. So generally, the market was forecasting about a 2.5% increase year on year, but actually it came down at about 2.4. And that basically gives people the hopes that there will be a bit more rate cuts that will come throughout this year, which obviously, reduces pressure on anyone with loans and especially mortgages. But what that actually is pricing in and what people are going to be looking forward to over the next couple of days is our Fed meeting that's happening in about 31 days. So on the 18th of March, there's going to be a next discussion with Jerome Powell, whether he's going to drop rates or not. Now, right now, it's at about 90.8%. But to the fact that the rates are just going to stay exactly where they're at as compared to 9.2, where they might actually cut rates. But look, at the end of the day, Jerome said that, hey, if tariffs are on, we believe inflation is going to be sticky, if not keep going higher. But right now, the narrative is slowly moving towards that. Even though Trump has done tariffs, the inflation is actually, if not staying similar, going down to a certain extent. So what happens over the next 30 days relevant to whether there might be a rate cut or the pressure that might be on the Fed is going to be a very interesting thing to watch. What does that really mean for the markets? Well, look, at the end of the day, if the US dollar direction is repricing the entire stack, that would mean that there's going to be movement around metals, yields, equities, and crypto all together, right? And soft inflation normally means that there's going to be easier policy, a weaker US dollar, and some good tailwind for risk, which is exactly why we're over here. Leadership and policy uncertainty can cause sudden US dollar spikes, and we're going to see that. Kevin Warsh is going to replace Jerome Powell in May, which basically means that that's going to have some impact. And generally speaking, we just have to wait that out and see whether he's going to cut rates immediately and make it a risk-on environment or not. But definitely some interesting news coming across. Another policy uncertainty we have under discussion right now is the crypto market structure bill, which is getting a lot of attention in America as to whether they're going to be passing that very soon or whether that's going to take time till April. And that basically gives a lot of clarification in legislation as to how crypto is going to perform within the US stock market and what kind of regulatory clarity it's going to have. So a lot of information that's going to be upcoming over the next couple of weeks or so regarding this policy and leadership. Since we are on that topic, I think a very interesting discussion point for us to start off would be, if we're talking about crypto, is to talk about Bitcoin. And look, recently I've been tracking some Fibonacci levels based on some prior movements. And if we see Fibonacci movements that we have had, you can see that Bitcoin is actually taking a bit of a rest over here at about 64K, and it bounced off pretty well. What's very interesting to me is right over here, the MACD. So MACD over here has actually recently just flipped bullish and is printed a little bit of a green bar over here, which could actually be signaling at least some positive momentum or a bit of a relief rally. Steve is going to cover that a little bit more later down the track. But the interesting news to me is that when I look at our CME futures, you can see that there's a gap over here, right? And that gap has currently lasted for a week. So a relief rally from the actual BTC chart, could that move us to about 80K? Not really certain yet. We still got some SMAs to cross over on the BTC chart, but we're just gonna take our time through to see how that goes. When we talk about higher risk appetites and higher variances, we definitely look towards Ethereum BTC. And ETH BTC over here is recently signaling a very similar thing. What used to be prior resistance in the market has been flipped to prior support. It's holding And likely in this small instance, it's shown a bit of a positive sides of ranging sideways. So if BTC starts moving up, do we have a better risk on environment or risk on appetite? Right now, we can only be hopeful for it as the MACD is currently still lagging a little bit and has not had that cross yet. So just gonna have to wait out and see on this side. And lastly, when we talk about higher risk on appetite, we have our total three, which is basically all of the altcoin market, excluding Bitcoin, Ethereum, and some of the stable coins as well. Uh, and in this particular case, you can see over here, this is currently holding strength at a Fibonacci level as well, based off the highs and the lows. And from that particular point onwards, if we have a rotation, we can see the RSI recently has started showing a little bit of strength and it's just recently bouncing. So if that could particularly mean any upwards momentum, it's going to be very interesting to see in the market. All we can say though is the recent inflation news and the impact that might have on the Fed has definitely signaled something. Whether this signal holds, that's what we are really looking out for over here. And on that, I'll pass it on to Steve.
Well, thank you very much for that, Yash. And since you've been talking about the cryptocurrencies for the time being, we'll keep on going with that particular theme, and we'll move forward from there. But we'll go on with Bitcoin to begin with, as we go right from the start there. And you are correct in relation to the bounce off a support level, and we've been talking about these support levels over the past few videos as well. And these levels were actually already in the charts over the last couple of videos there, and you can go back and check those as well too. But in particular, and I'll enlarge the actual chart so you can actually see that a little bit more in depth, you can see around about the 66,000 level, which is that particular line right there. We actually had a very, very clean bounce on Valentine's Day. So maybe seeing a bit of Valentine's love there in relation to Bitcoin, and people have just started being actually buying into that and starting to actually get a little bit into there. And you can see that even on the lagging indicator as well, the bounce directly off that level there. So it appears as though there's a bit of interest getting back into the levels for Bitcoin. And interestingly enough, it's even bounced back over the prior support line around about here at the 69,200 level as well too. So looking as though we're getting some strength back in there, whether it maintains itself above this level or not, maybe, we'll see. But the real story behind all of this is really fascinating. I'm going to take you through a few of these right now. Reason being I'm saying this is it appears as though the altcoins have started to kick in a bit more action. And this has really been fascinating. Not too sure whether many people have actually realized this or not. But around about the time of Valentine's Day as well, we've seen a lot of altcoins really starting to kick into effect. Bitcoin Cash, for one, went up 12%. Very, very fascinating move overall there. Dogecoin went up as well, 14.9%. Hedera, now I apologize for all those 4-hour support resistance line notions there, but I've actually taken a position in this one myself as well. That went up on Valentine's Day around about 6% as well. So that one was quite a decent mover there too. Pepe, this was a real mover. That actually only happened yesterday in terms of the big move there, but up 27%. So a real major move there that followed on from all the other altcoins. And Shiba as well, that went up a little bit on Valentine's Day, about 4.5%, but yesterday in particular really moved about 11%. Now you might be going, why? Why is this important? Why does this all matter? The big thing to really take a look at there were the moving averages. If you take a look through those and all of those charts as well, it appears as though as soon as they actually really started tackling against the 8-day EMA, that seemed to be a trigger in terms of getting things moving overall. We can quickly scroll back through those as well. Shiba, Pepe, Hedera, Dogecoin, and Bitcoin Cash. Now you can go through those slowly again on the video as well. I won't really drag through those, but you can see as they all started to cross over those 8-day moving averages, and some of those 8-day moving averages have now crossed over the 15-day moving averages as well, that really kicked into effect the big move upwards. So something to keep an eye on for all charts, really, that tends to actually turn things around. But what really turns it around, like you can see with Bitcoin Cash, for instance, is when it really bounces off a prior level as well. So you've got additional confirmation on top of it all as well. We're starting to see that with Bitcoin as well. Bitcoin itself is starting to actually cross over that 8-day moving average right now as we speak. Ethereum, though, on the other hand, starting to do the same thing, but the problem with Ethereum, as you can see, is it's now encountering, and I'm going to enlarge this chart so you can really see it, is it's starting to encounter a prior support resistance line at
Mm,
2100. So
mm,
keep an eye on that. If we start struggling to get past that 2100 level, and you can see it's in the prior videos as well, I'm not making any of this up. These levels exist from previous times. This particular level is back from 2023. If it
mm,
struggles to get past this level, then we might have an overall issue in relation to the altcoin season. So it's got to get past this area to really see what's going on.
yeah.
We switch to Ichimoku. What's the story there? Look at this. We've got an issue here in terms of, let's enlarge it so you can see it. I'm not making any of this up. We've got potential problems in terms of getting past that particular resistance area in relation to the lagging indicator. Overall, that needs to break through to really show strength. So that's where a major headline is going.
Mm,
Altcoins seem to be leading the charge. Will it drag both Bitcoin and Ethereum up? Similar to those discussions we had previously in relation to Dow theory. You want everything to really rise in unison to give you that additional confirmation that things are moving upwards. That's the way of looking at it in that way.
mhm,
So that's the story in relation to our altcoins and all of our crypto aspects there. Now, we've been talking about gold and silver for quite a while as well, too. Remember how we were talking about gold in particular having a bit of a struggle in recent times with the baseline and the Tenkan Sen and all of those kind of things there, and how
mhm.
gold and silver had that relative strength issue going on? Well,
Yeah.
still going on in effect as well. I'll admit that too. But interesting to note, you take a look at the daily chart here with gold, we're now starting to form higher highs.
Mm,
Hey, interesting, hey? So higher highs here, we've got some more strength forming in with gold here. And on top of it as well, it's actually getting above those baseline and Tenkan Sen. So we're actually seeing on the Ichimoku in particular that there is some strength forming now with gold in terms of potentially raising things up. So the metals look like they're strengthening again. Silver, still showing some weakness, okay? Relative weakness compared to gold. However, we've also got the higher high forming here on the daily chart. So
mm.
strength starting to rotate back into silver as well, but not the same extent as what we have with gold.
Yeah,
Very
definitely.
important to note, okay? But do we have higher lows forming yet? Not until we get a swing up.
Yeah.
Important to note that. So if this keeps on going downwards and forms a lower low down there, then you've got lower lows still forming. So it's very important from a swing trading perspective there with silver and also with gold as well, because it hasn't formed a swing up yet either after this low. So
Agreed.
very important to keep in mind. So that's the metals in terms of the major metals anyway. You probably still need to look at all the other metals in their own to figure out what's going on there. Now, okay, what about our good old friend, the indices? Another major story that's going on. Remember last time we were talking about the moving averages and how Dow Jones in particular was moving away from all these moving averages, and the chances are it might pull back. We discussed that during the week in terms of on Wednesday. Sure enough, what did it do? Down she popped. Okay, so
Hmm.
it came back and did a retracement there. Not unexpected. So that's a circumstance in terms of what's actually happened there. It's come back to its moving averages, and that's been the circumstance there. It's coming back now to test the 50-day moving average. The Russell, similar kind of thing that's happened with that as well, has come back down and testing now its 50-day moving averages there. The real story behind this, though, is really fascinating because, like you alluded to before, all this interest rate talks and all those kind of things that have been going on was really, really interesting because it had an effect on the bonds. Did you notice
Hmm.
that in terms of the TLT during the week?
Yeah, I'd say it's gone up a
Mm,
lot.
a lot. Exactly
Hmm.
right. So a lot of people got these expectations in the market now all of a sudden that the interest rates are going to be heading down south, even though the
Hmm.
numbers aren't really reflecting it on the Fed watch. Fascinating.
Yes.
Okay. So this is really, really interesting overall. We've got the bonds going up massively during the week here, probably overextended too. So don't be surprised if all of a sudden it comes back, especially as we have a potential resistance point here
Hmm.
and a potential resistance point here. So it might hit those and then swing back a little bit down there. So don't be surprised if that happens. But
Correct.
as bonds rise, interest rate yields fall.
Mm.
But why didn't the Russell rise along with it?
Mm.
Hmm.
Probably because it was staying in truth with its other partners like the SPX and the SPY. And
Yeah, now you're hitting the story. That's the real
mm,
story. That's why it matters. Now, if we actually go up and take a look at what the SPY did,
mm,
look at this. Not very clear on this, but you can see the moving averages are heading down.
mm,
That's an important factor. But the Ichimoku makes it look clearer. Take a look at this. This is what's really fascinating. This is why it really matters. Look at that. We started to penetrate into the cloud now. That's one big.
yeah.
But the most important factor is the lagging indicator. Look what's happened
Mm,
there. That's now on below both the Tenkan-sen and the baseline. And if you go back in terms of our previous discussions, mate, what was I always saying about what happens when the lagging indicator goes beneath both the Tenkan-sen and the baseline? It tends to indicate what the general price of, or what the general unit price will actually do most likely in the future.
yeah.
Be more than likely heading down south.
A little bit of a downwards momentum.
So it's not looking all that great in terms of the SPY, and it's definitely not looking all that great in terms of the Qs.
That's a very interesting thing, and that's probably going to go deeper into whether we are having a rotation in a risk environment, and whether that's positive for risk on assets or whether that's negative. It's definitely going to be very interesting next couple of weeks to see that through.
Absolutely. And that's the big takeaway from all of this here. So really the story has basically been more along the lines in terms of the indices, the altcoins, and the metals. That's the
Great.
real story overall with everything that's been going on. And I'll just get rid of that particular message there. But lots of things that have been happening, lots of lots of dynamics really flowing around with everything that's going on. So what does this really mean for all of our investors out there then? Because
Hmm.
there's a lot of things going on. And we've got our different groups that we always talk about in terms of our conservative investors, our aggressive investors, and our long-term investors. So in terms of all of these categories, really what it comes down to is watching these key levels. You can see overall what's really happened in terms of those major indices. The SPY and the Qs in particular are looking a little shaky. There is absolutely
Hmm.
no doubt about that at all. So what you really want to take a look at more than anything is if these key levels that we actually have in those indices that are going on, it's a suggestion only, obviously, in terms of what we can suggest here, but if those key levels tend to break and those support levels are gone, then taking a look at all of your positions that are actually within your portfolio and seeing whether or not you may need to tweak or lighten some of those positions may be a worthwhile proposition to take a look at there.
Valid.
Absolutely. So in terms of long-term investors, well, if you've got positions in your portfolio there, then maybe even taking a look at options as a protective aspect might be a worthwhile thing there. If those options are not too expensive, that could be something to take a look at there. Or maybe even incorporating some income generation through the use of options may be worthwhile investigating there as well too. Remember, options themselves are actually designed in terms of risk mitigation. A lot of people don't realize that overall. Something to worthwhile have a look at in terms of that aspect there. For conservative and aggressive investors, lots of levels, as we've basically been discussing in terms of everything throughout this particular video, and also even the previous videos as well. So take a look at those as well too. Work with those, develop plans for the short term and the long term if you want to, but also take a look in terms of what you can use in terms of potentially looking to go short if you wanted to, or taking a look at those areas of strength in terms of anything that you wish to have a look at in terms of buying, in terms of potential opportunities. And with that, mate, I'll pass it right back to you.
Well, we've covered it a lot in this video, guys, but look, the next move isn't about headlines. It's about whether risk assets keep strengthening or snap back down, because everything is priced off that right now. Comment DXY, gold, or crypto as to what you think leads the next week rally. This was never financial advice, it's just how we think about the markets.